I'm going to teach you today how to adapt to this market where I'm actually winning a little bit less than normal, but I'm still making more money. And that is what matters in the end. You know, you're trading in the stock market to make money so that you can live a good life. That's the whole goal here. So whatever it takes to make more money, that's what you should be doing. And as a trader, you have to actually adapt to the changing stock market. You can't ignore it. You can't pretend that the market is always going to be the same. You have to adapt. So I'm going to teach you exactly how to adapt today. So I'm actually in Tokyo right now. I'm sorry for some of my screen settings. We're having some technical issues because, frankly, I'm doing this from halfway around the world where my whole team is based. But this is these are some pictures that I posted. This is on the left. This is Ginza, one of my favorite neighborhoods here in Tokyo. And this is me with my family on the right-hand side. We flew all over just a few days ago, and we're still kind of jet lagged. But I'm here actually in Asia. I'm going to visit several of my schools that my charity foundation is building. I've already opened one school in Bali, and I have roughly 10 now actually in development. So 2 more schools of mine are opening. So I'm taking my whole family, and that's going to be the next few days. But I wanted to give this webinar even though I'm literally on the other side of the world because it's important. So why work while I'm in Tokyo on vacation? A lot of people ask me this. They're like, Tim, you enjoy yourself. You deserve some time off. No, I don't need time off, okay? People who hate their jobs, people who need to be in their office, then they take time off and get away and they go to some, beach or, wherever they can. I can make money literally from anywhere, and I can travel all the time. That is my financial independence. And I know it's the dream. I know it sounds too good to be true, but because of this unique time in history, thanks to technology, thanks to strategy, thanks to this tremendous ability to get educated and really create knowledge and transfer knowledge. By transferring knowledge to you like never before, it's a very exciting time. So all I need basically is a laptop and an internet connection. I am doing this off a laptop, and my team is back in the US helping me coordinate all of this. So I want to ask you, what is your financial independence? It doesn't have to be about traveling. Some people don't like traveling. I'm not telling you that you have to do that. You have to tailor this to your needs and your desires. Do you want to be debt-free? Do you want no more college loans? Do you not want to have to stress about money? Whatever it is, my goal is to help you get there because I love freedom and I love independence. And frankly, once you have this knowledge, once you have money, you can do whatever your heart desires, whatever you want. And that is the true beauty of having money. It's not just for money's sake, it's for freedom. So that's what I'm all about. And it's kind of funny that, I didn't plan this to be here in Tokyo. I just get news from my charity, and we work with other charities about when several of my schools are opening, and I like going there. I want to see the work, and I love seeing the little kids' faces. It's a beautiful moment. This time I'm actually bringing my family. I know my mom is going to start crying. It's going to be beautiful, but don't necessarily think that you have to do this exactly like I do. It's all about you. I also have to give this disclaimer. Read it closely. It's on all of my websites, all of my DVDs, all of my video lessons. Listen, I am not trying to tell you what stocks to buy or sell. I'm trying to teach you. And I'm trying to show you what patterns I've learned over the years. This is purely, strictly for educational and entertainment purposes. I'm not a broker. In fact, I actually hate brokers, and most brokers hate me because I tell people not to trade as much as you think you need to. So I want to teach you good patterns that I've learned over the years. That's what this is all about. I am not a professional. Some people say, oh, Tim, you're so unprofessional. You don't wear a suit. You don't have a fancy office. Correct. Okay? I'm not an accountant. I'm not a broker. I'm not a financial advisor. I'm just some random self-made millionaire who wants to kind of change the game and share what I've learned over the years. And you can ignore me. You can not believe me, whatever you want. But I'm still going to try and teach you what I've learned because I never had a teacher. And that sucked because I, frankly, was just very confused for my first few years. I did well, but I made a lot of boneheaded mistakes. And every single day, I try to be the mentor to you that I never had. So this is all for education. So who am I? Some of you guys know, some of you guys don't. I'm just going to go over a little brief interview why I think you should listen to me. I turned 12,000 now into 4.4 million trading penny stocks. I was in the TV show Wall Street Warriors. I've been on Below Deck and New Money. I've been featured on Steve Harvey, Larry King, ABC, CNN, CBS, CNBC, Fox, Fox News, Reuters, Business Week, Forbes, TMZ, Market Watch, MSN Money, Yahoo Finance, Street.com, New York Post, New York Observer, and New York Times, and so many more. Because I will tell you my lessons, and I will tell you everything that I've learned to anybody who listens. And frankly, you know, when you turn a few thousand into a few million and sustain it, not just on like one random lucky pick, but based on strategy, a lot of people want to talk to me. And it's kind of cool. You know, I'm getting over 3,000 emails a day from people. And I love it because I love teaching and I love trying to help you guys. I've already helped thousands of people become profitable traders, and I've created a handful of millionaires along with dozens of students who were earning six figures. And this is all just in a few years since I began teaching. This is me and my top student, Tim Grittani, on Fox and Friends. A little while back, he turned 1,500 into $1 million, and the story kind of went viral. We're on Fox and Friends. We're on Reuters. We're on Fox News. This was the big article on CNN that really went viral when, you know, he turned 1,500 into $1 million in 3 years, and they looked through all of his trades. This is actually confirmed. I know there's some people who claim this stuff, but they don't show every trade. They don't explain their strategy. They're not real. There's a lot of fakers. Guess what? Tim Grittani and I are real. And this is his profit chart now. In his fourth year, he is up to $3.38 million. And I want you to look at his stats here. He's winning roughly 70% of the time. His average gain is only 6%. So it's kind of amazing to see what works. And, you know, we don't always trade the same stocks. Even if we do trade the same stocks, sometimes we oppose each other. Sometimes I'm going long and sometimes he's going short. There's not one right way to trade and make millions. What I want to try and teach you are the rules and the patterns by which my top students and I have, and how those patterns are pretty much the same thing as always, literally for the past like 20 years. But they do change a little bit, and it's important to understand the variations. You have to understand the whole game. You have to understand, you know, what moves these stocks. So that's what today's webinar is about. Here's his year so far. He's made just under $700,000, and he's been traveling a lot. He was in Iceland. I think he's in Puerto Rico right now. He was in Europe a little bit. You know, he's newly married, and this is what I want for you, okay? I want you making 6-7 figures per year. And I'm very proud of Tim Grittani, and I'm glad that he shares everything transparently. Every trade. And he has some losses too. He has a lot of losses, and he shares those. So very grateful for him. Here's another one of my millionaire students, Michael Good, seated next to me on the Steve Harvey Show. This was a few months ago. Great honor. And this is Ivan. He's a part-time trader, and he's up about, I think, what, like $250,000. So it's not just about making millions. As I said earlier, it's about freedom. And if you make $250,000, or Michael Good, he's closing in on $2 million, that is freedom. And we explained this to Steve Harvey. Steve Harvey was impressed. It was an amazing experience. Here's Michael Good. He's at $1.76 million in just a few years. And look at his profit chart. It's so gradual, and it's made up of small gains. He's only winning 63% of the time, but his average gain is 16%. So he actually doesn't win as much, but when he wins bigger than Tim Grittani and myself. And it's kind of cool to see that. But if you win 60, 65, 70, 75% of the time, and your wins are bigger than your losses, it's very tough not to grow your account. That's what we do, and it seems to work again and again. Here's Michael Good this year. He's trading a bit smaller this year. You know, he's growing his family. I actually met his little baby girl. She's so cute. And he's been focusing on family more and teaching more. But that's awesome. And he's still making, you know, just under $200,000. And you can see even when he loses, I mean, his losses are very small. He's very diligent in cutting losses quickly. I know a lot of people are scared to trade. But if you're willing to cut losses quickly, it's not that scary as you think. You know, this isn't like going to the casino and betting it all on red or black and you double your money or you lose all your money. You can lose very small amounts, and I highly encourage cutting losses quickly. Even though I trade penny stocks, you know, I'm kind of like this cowardly trader where I trade so safe because we're trading these crazy stocks, and frankly, I think that it's better to be safe rather than potentially risking being sorry. So here was one of the most incredible experiences. Just unreal to meet one of my biggest inspirations, Larry King, the media legend himself. He interviewed me, and it was just a great time. And I never expected that when I was growing up. You know, I'm from a small town, Orange, Connecticut, and it was just an amazing experience. I want him to interview you. I want you to become so successful that you get interviewed by all this press, and you're in my exact same spot. And frankly, I think that you can be, because I'm not that smart. I'm not that good at math. I just have experience, and my work ethic is second to none. That is something I will brag about. Here are some of the gains that I've had over the years. This was actually posted by one of my critics, who's like, oh, Tim Sykes, he's never even had $1 million year. Correct. I don't make millions of dollars per year from trading. I make a solid 6 figures year in, year out. And guess what? If you make 6 figures year in, year out, it adds up to millions over time. Some of my students have made millions of dollars per year, though. So it's not just an exact science, and it's not just about what I do versus, you know, what my students do. I love it when my students do better than me. And I actually trade with a very small account in order to teach. In 2014, I made nearly $1 million. I was trading bigger. 2015 and 2016, I'm trading with very small amounts. Overall, I just passed 4.5 million in profits. This was kind of a cool little milestone that just happened the other day. But my profits, you know, I'm making like 600 here, 100 there. I'm trading with a very small account. And so this year, I'm only up $134,000. But you have to understand, if I was trading bigger and not, you know, necessarily making video lessons, real-time video lessons, and, you know, commenting on it in the chat room, and I actually just focus on the trades rather than teaching, I would trade bigger, and this could be $1 million. It doesn't matter if I make $1 million or 100,000. I just want to show you good setups. And I actually enjoy trading with a smaller account. It's more challenging. Everyone on Wall Street thinks I'm crazy because they're all, you know, trying to manage more money. And here I am going back to like my $12,000 roots every year. Next year, I'm actually going to start with just 5,000. But it's important for me to show you how to trade with a small account. Okay? It's not just about getting as much money as I can from the stock market. Teaching is very different from trading. So I know some of you guys just want to make as much money, but you have to have the right mindset first. So don't be afraid to trade small. I know many people who start with 1,000, 2,000, you know, Tigger Tani, who's at 3.38 million, he started with 1,500 of his own money. Okay, I started with 12,000. Most of my top students start with just a few $1,000s. And it's not a bad thing. It's a good thing to start small. It forces you to learn the strategy and grow your account so that when you have big money, you're better prepared. Here's one of my students, Airplane Jane. She's actually pregnant right now, and she's giving birth in a few months. Very exciting time for her. And she tweeted me this, and she said, it's the total honesty that drew me to Timothy Sykes as my mentor. Without it, I wouldn't be where I am today. Thank you. Thank you, Jane. And this was, when was that tweet? That tweet was in May 22nd. Then a few months later in July, she says, it's official. Today I'm above my $100,000 profit mark. Never would have thought this possible. Thank you, Timothy Sykes, for starting tools. Now, in November, she's actually at $175,000 in profits. You see her winning percentage, roughly 70%. And she's making just 2.8% per game. So that's fine. She's trading much safer, but she's on the right track, and you can see where her account goes. And this is the beauty of trading, okay? You can gradually grow your accounts, trading safely. All of us have the exact same chart. It's pretty staggering what this strategy is capable of and how we've kind of, you know, just steady it. Here's another student. Jeff just passed the $100,000 mark, and I actually wrote a blog post based on this tweet this past summer, and it was a key trait you need to become a millionaire. And the key trait is patience, okay? I'm showing you this kind of inspiration between myself and my top students to show you what's possible. But to get there, you're going to have to be patient. You're going to have to persevere, and you're going to have to study your butt off. So Jeff had patience, and he made over 100,000. I like this. Charlie, who's another one of my students who's up and coming, and he makes me videos on Twitter, and you know he's learning and he's getting better every time. he actually tweeted to Jeff, and Jeff replied, "Thanks, it's been fantastic. Lost a lot at first, then something just clicked, averaging a little over 10,000 a month." And I need you to understand that's how it is for most people. Not necessarily losing a lot, but losing a little, or not even paper trading, not even trading for real, like paper trading at first, just practicing. That's okay. You don't have to be so successful right at the beginning. So you need to have the proper expectations. Jeff was losing, but now he's averaging over $10,000 per month, and he's showing all of his trades. This was his month of July. He made nearly $15,000. That was awesome. In August, which is technically usually like the slowest month of the year, but this year was just crazy. The market was on fire. And even though Jeff made a lot of mistakes, he's losing 3,000, losing 2,000, losing 3,000, his gains overwhelm it, and he finished up 5,000. So between those 2 months, he made 15,000 and 5,000. So he's making 20,000 divided by 2, roughly 10,000 per month. And he also has a full-time job. So he's trading part-time. So don't feel like if you have a job or if you're already in school, this doesn't apply to you. I have many students who are part-time traders and part-time students. And you have to make it work for yourself, no matter who you are. So don't feel like you have to quit your job and quit your school to do this. If you're in school, if you have work, guess what? You can study at night. You can study on weekends. It's going to take a little while for you to get all of this anyways. But month 3, month 4, month 6, month 10, month 12, month 15, month 20, that's when it starts clicking. And it clicks for different people at different times. And it's based on how hard you study. Here's another one of my students. I just love this message. I actually had to edit his name because he didn't want to be public. But he said this: "Hey, Tim, what's up? So I was a challenge student late 2013 into 2014. During the first year, I managed to wipe my account 5 or 6 times, though I never stopped learning from my mistakes and from your teachings. I'm not looking for you to publish it, though I have to say thank you. Today, after roughly 3 years, I hold an account of $320,000. I owe you more than you can imagine. Bought a house, bought my dream car. I just wish more people will understand that you are real. Thank you, and please do not publish, or if you do, remove my name. Thank you, mate, for real." NH, thank you for this message, okay? It's cool if you want your privacy. I get it. When you're talking about a lot of money that you make, it's kind of weird to talk about that publicly on the internet. But I love seeing your dedication. And, I don't condone blowing up 5 or 6 times in your first year. He was obviously risking too much, taking too big risks, and that's not me at all. But at least he learned and he stuck with it. And again, also, some of you guys are so scared to lose like $1,000. You have to think about what $1,000 will mean for you in the long run. Now, I'm not a fan of losing money at all, but you have to think about education and market tuition. You can either learn from me or you can learn from the market. And if you ignore my rules and you learn from the market, trust me, it's going to be a lot more expensive. It's going to be very, stressful. And I don't want that. So as long as you keep your losses to a minimum, especially at first, you don't even have to necessarily trade right away. I highly encourage you to study, but you stick with it and it clicks after a few months, after a few years, and then you have that knowledge for the rest of your life. It's an amazing, amazing feeling. So NH is up to $320,000 after 3 years. It all equals out, and he actually messaged me again. I mean, he was blowing up his account, yes, but it was like $1,000, $2,000. So he lost like $10,000 while learning over time, but now 3 years later, he's at $320,000. So let me ask you, would you like to lose $10,000 in order to make $300,000 in the next 3 years? And now, he has the knowledge, and maybe it'll be $1 million in year 4, year 5, year 6. And then you have that knowledge for the rest of your life. It's an amazing, amazing feeling to have that. Here's another one of my students, Mark Crook. Look at his profit chart. This is just awesome. He is one of my best students. He's up. He's made locked in, not just up, okay? It's not a profit until you actually take it. Some people say they have big profits, but they haven't taken it. He has taken his $618,000. He's only winning 55% of the time. So don't feel like you have to win 75% of the time. But he's been learning. He's been studying. And I love this. Not only is the $600,000 that he's made, very nice, those profits allowed him to quit his cubicle job in Texas and move to Miami, where he met the love of his life. And I love this story. I actually went to their wedding. It was a beautiful wedding, beautiful people. And I love this. You know, this is what I love doing, teaching. And it's not just like, okay, I'm going to teach you and then never talk to you again. Like, I'm involved in your life. This is my passion, to change your life. I want all of you guys who work cubicle jobs to quit if you hate it. Some people like cubicle jobs. They're weird. But if you hate your job, knowledge and studying can free you of that indentured servitude, okay? And the cool thing about Mark is not only is he a trader, he's also a teacher. He's helping me mentor other trading challenge students, and he makes exclusive video lessons and give trade alerts now too. So he's also helping, and I love doing that. And I should also mention, I have 4,000 video lessons. He has watched all of them 3 times, and he is the one responsible for being able to tag and categorize them all. It's kind of crazy how much he studied, but studying pays off. And you can see it's given him freedom. Here's me and Mark at the Miami Heat game courtside. I wanted to celebrate one of his milestones. I think this was when he passed, I don't know, like $200,000 or $300,000. I like celebrating with my students. I've taken my students to the Maldives and the British Virgin Islands. I'm slightly crazy. You should know that, okay? Nobody else does this. No one else splurges with their students, but I like to, because, again, it's not just about the money. It's about the life-changing, you know, events that happen once you have this knowledge and money. Here's Mark Crook at his new house right on the beach. And look at this. This is in Miami Beach. And he says, nice view of his backyard. This is his office. Literally, his office is no longer a cubicle. He can look out and he can go down to the beach whenever he wants. And he also trades when he travels. This was him in South Africa, and he made $5,000 from this spot, just to show you literally all you need is a laptop. Here's him and his beautiful wife getting married by this waterfall, and it was just, I love it. You know, even just thinking about this, it brings me back. So in case you're wondering why I do this, why do I work so hard? I mean, it's like ridiculous times where I'm at in Asia here, but this is what it's all about. Actual life-changing information. Here's another student, last student. I have to get to this webinar, but I can't help it because I'm so proud. Here's Brett Russell tweeting me in October, and he said $11,000 profit for him in September, and then $20,000 for him in October. Consistent profits, way better than trying for home runs. And now 2 days later, he says with 2 days profit brings his October profits to over $23,000. So which is double September. And he says, thanks. I work most of the year in Iraq, and trading is about to make it possible to stay home soon and enjoy life with a family. And this is what I love. Okay, he's making more money every month. He's doubling his profits, which is awesome, but he's doing it for a purpose. Okay, he's tired of going to Iraq. He's tired of leaving his family. So whatever your purpose is, if you miss your family, if you hate your cubicle job, if you want to travel, if you want to start a charity, if you want a nice house or a nice car, if you just want to treat yourself or your friends or your loved ones, whatever it is, I want to show you more and more people are getting on the right track. One more student. I have to tell you about Mags. I have to write a blog post about her soon. She sent me this just recently, and I'm so excited. She is 6 months into my challenge, and she says that she has learned so much that she asks herself, why didn't I start earlier? She says, choosing your program was the best decision, and when I feel lonely at my studying desk, I look at my vision board on the wall, and I just keep going. You and the team allow me to reinvent myself after a 20-year-long career, dedication from all sides. And she's been making money, and more importantly, she's been learning. And that is the right attitude. And her vision board with her goals, guess what? I know many of you guys have that, and I encourage that. You should dream big, okay? I had a Lamborghini poster growing up and a Ferrari poster on my wall growing up. Now I have a Lamborghini and Ferrari. So if you dream big and you work hard and you study and you make it happen, dreams can come true. But you're going to have to study, and you're going to have to work for it. They're not just going to come true magically. I'm not a fan of the lotto, okay? I don't believe in this kind of thing of luck. The harder I practice, the luckier I get. That's how I think about luck. So you can make your own luck by studying. Anyways, let's get into what's going on with this market. because a lot of stuff has been changing lately. So what is new right now in late 2016 heading into a very uncertain 2017? Well, my overall winning percentage is slightly down. And the question is, do I care? The answer is nope. My losses now are smaller than usual. So even though I do have some losses, I'm cutting losses very quickly. So my overall percent and my overall dollar gains are larger. It's okay to be wrong in changing markets as long as you manage your losses well, like I do. Let me give you some data. Here is my analysis on Profitly. Remember, I show every single trade. Now, nearly 20 years of trading, a little over 4,000 trades, and I'm winning roughly 74% of the time, which is pretty damn good. Here is a one-year chart. You can see I changed the data, the search here on Profitly, and over the past year, I'm winning 74% of the time. This is not random stuff, okay, because I have a process. And in 400 trades, I'm winning roughly 74% of the time. So roughly 300 out of 400 trades are profitable, which is cool. But here is 90 days, and in the past 90 days, I'm only winning 70% of the time. Uh-oh, I dropped 4% in winning percentage. But it's not the end of the world. My dollar gains are still up. If you look at my losses, they're very small. I'm losing 50 bucks, 100 bucks. It doesn't matter. It's not the end of the world. And I'm still winning more than 50% of the time. If I was winning like 30% of the time, then I would be worried. But then I would be an ugly bald man on CNBC, who's right about 30 to 35% of the time, as exposed by Barron's. How do I win less but still make bigger percent gains? Well, even a veteran trader like me needs to adjust and adapt to changing markets. I had to change. You have to adapt or you will perish. I had to improve my own trading system to survive and thrive in this changing market. So what do I do differently? Well, I use a rating system now before I make a trade that helps me choose, execute, and manage only the best trades that I see. So I've gotten better as a trader and now as a teacher thanks to this rating system. So get ready to take notes because I need your full attention right now. In case I didn't have it already, I know some of you guys are like dozing off. I need your full attention right now. Do I have it? Most traders lose due to a lack of planning and adapting to what works. Do not let that happen to you. You must plan. You must recognize that the stock market changes and it's not one solitary thing. You can't just have one strategy that's going to make you millions and billions of dollars forever. You have to adapt in bull markets and bear markets. Also, I have a quick special announcement. A few of you will be joining me live in person for trading. So get excited for that. Later on, I'm going to explain exactly what you can do to join me. But I think that's an incredible opportunity. Let's get to some patterns. 3 main patterns that I look for. I see the same patterns over and over, and I've learned to focus on just a few that consistently work. And they're not exact, okay? It's not an exact science. I adapt to the slight variations. So you can't expect to be perfect. There is no such thing as perfection in the stock market. I'm never trying to find the exact bottom of a stock or the exact top of a stock. I'm trying to take the meat of the move and I'm trying to profit as well as I can. And I'm not that great of a trader, okay? If you guys have been studying with me for a while, sure, I make, good gains and I make millions, but I'm actually a better teacher. And I can pass down these lessons to you no different than Archie Manning did, the father of both Eli and Peyton Manning, 2 Super Bowl quarterbacks, even though he himself never won the Super Bowl, never was a Super Bowl MVP like both of his sons were. So I kind of think of myself as Archie Manning. And even though I've made $4.4 million, I think you can do better with my guidance. Because again, I never had a teacher. I have a lot of bad habits, but I talk about them all so you can learn from them and do better. Part of the key to success is you have to practice boring old habits and then refine your process over time. What does that mean? I'll explain. This was written roughly 2 weeks ago by one of my favorite NBA basketball players, Ray Allen. Ray and I go way back. He was at the University of Connecticut, UConn, and I was a UConn fan. I also saw him hit probably one of the most important shots in NBA history in Game 6 finals against the Spurs. He hit a three with just a few seconds left, and it totally changed the game. And the Miami Heat went on to win the series. It was an incredible comeback. I mean, the Spurs were like a few seconds away from becoming NBA champions, and Ray Allen's three changed that. But he just retired on November 1st, and he wrote this letter to his younger self, which is truly amazing. I mean, you should Google it. Google Ray Allen letter to my younger self. It's worth a read. But I picked out this passage because this really applies to stock trading, not just basketball. And I think this applies to anything that you want success in. So Ray Allen wrote, you'll keep showing up every day, putting in the work. You'll put up more than 26,000 shots in your career. Almost 6 out of 10 won't even go in. I told you this game was a son of a B. Don't worry, though. A successful man is built on 1,000 failures, or in your case, 14,000 misses. You'll win a championship in Boston. You'll win another in Miami. The personalities on those two teams will be different, but both teams will have the same thing in common: habits. Boring old habits. I know you want me to let you in on some big secret to success in the NBA. The secret is there is no secret. It's just boring old habits. So let me just actually change this a little and apply it to myself in stock trading. But you'll keep showing up every day, putting in the work. You'll put up more than 4,000 shots or 4,000 trades in your career. I'm adapting this on the fly. Give me a break. Almost, he loses 6 out of 10. I lose like 4 out of 10. Almost 4 out of 10 won't work. I told you the stock market was a son of a B. Don't worry, though. A successful man is built on 1,000 failures. Or in your case, let me do math, 40%. I'm not good. 25% of 4,000. I guess 3,000 misses. So out of my 4,000 trades, I've had 1,000 misses and 3,000 successes. He says you'll win a championship in Boston, you'll win another in Miami. I'll say I have several millionaire students, and I became a millionaire myself. And the personalities of my millionaire students are different. But both first two millionaires have the same thing in common: habits, boring old habits. I know you want me to let you in on some big secret to success in the stock market. The secret is there is no secret. It's just boring old habits. It works. It's staggering how similar the success in the NBA versus the success probably in the NFL versus success in the stock market is. The difference is that if you're going to be in the NFL or NBA, you need to be genetically gifted. Okay? I don't care how much you practice. If you're 5'2", you're never going to play in the NBA. Never. Okay? So get that out of your head. No different than if you're a singer wannabe. You know, if you're not born with talent. The beauty of stock trading is that you don't necessarily need talent. Okay? You need work ethic and you need knowledge, and ideally you need guidance, but you do not have to be genetically gifted. I'm actually terrible at math. I'm going to tell you some funny stories about how I totally screwed up this Japan trip and I'm getting all the time zones wrong and the hotel is just laughing at me. But I have work ethic and I focus on my boring old habits. It's important that you recognize this. I changed the date of this webinar because I wanted to include a whole section on boring old habits. And what are boring old habits as a stock trader? Well, it's not shooting free throws or shooting jump shots. It's studying the past so that you can be better prepared for the future. Boring but reliable pattern number 1. Earnings wins matter. New big investors matter. New product launches matter. I look for these kinds of catalysts. I'm not just going to trade a random stock. I don't just buy a stock and say, oh, this is a good company. Oh, this is a good product. I want to see big news, and more than just the news, I want to see the stock react to the news. So here is one trade, PTBI, a little while back, and they got a big new investor, and the stock spiked from 3 to 4, and I was buying it in here in the low 3s and mid 3s. I sold way too soon, but over the next day, it went to the 7s. I often underestimate. The cool thing with this boring but reliable pattern is that this pattern has legs. Okay, it can move for several hours, several days. But the key is not trying to predict news ahead of time, just waiting for the reaction. Sometimes a stock will have good news, or what you think is good news, and the stock doesn't react. That's not my pattern. I need the news and the spike reaction for it to fit my pattern. And I wait for these situations. Here's another one, RCON. It had some news right in here, and the stock doubled. And most people would say, oh my God, Tim, why are you buying a stock that's doubling? Well, guess what? Because when they announce news like this and the stock spikes and holds its spikes and can keep going, guess what? The next day it goes up another 50%. So you have to wait for these situations. It's not necessarily every single day. Here's BIGG, BGGL, which actually totally went bust. And this company doesn't matter in the long run, but they reported good earnings and they spiked from the mid ones to the twos. I waited for the spike. I'm not chasing. I was actually flying on this day. It was kind of funny. I'm looking at this stock while on like airplane Wi-Fi, which isn't the greatest. But I wait for the breakout. I wait for it to spike past all the morning highs. I like buying breakouts. Look at this. Lucas is now winning $2,600. He keeps tweeting me. This is amazing. Anyways, I bought the breakout even while on the plane here because it broke to new highs and it kept going. And in case you're not good at math, again, I sold this too soon. I made about $4,000 while on the plane, and it kept going all the way to 350. So I bought it at 250, like what, an hour and a half, 2 hours later, it's at 350. I think the next day it even touched 4. I mean, it was insane if you wait for the right patterns. So I could have made much more, but I made my 4,000, and I was happy because, again, I made this trade while traveling, which is always difficult for those of you who travel. Here's another one. This one just happened recently. So the market is a little different right now. It's not just about buying the strongest stocks. It's about waiting to see which strong stocks can extend their early gains. So SKLZ the other day spiked here. It had a bad few days, okay? It dropped from 4 all the way down to the 1s. But it spiked here on news of a new contract. And the question was, okay, it spiked, but can it continue? I was not buying it on the initial spike. I was not buying it midday. I waited until the afternoon when it took out the day high here at 230. And that's when I bought. And it went up to the 270s and I sold. I took my profits. I didn't want to risk it. The next day it actually did hit 4. So I sold that one too soon. But I go in with my boring old habits, waiting for the initial spike based on news. Ideally, the stock can break out to new highs at the end of the day. And I buy the breakout in the afternoon, either sell it before the market close or the next day, or sometimes if it's really good news, I'll hold, 1 or 2 days, sometimes even 3 days. But that's pretty much it. I wait for these plays, and then I act like a sniper. I strike. And the patterns, as you can see from my trades and my students' trades, you win more than you lose. Here's my SKLN trade. I was in at 233 roughly, out at 269 roughly. I made $700. And again, remember, I'm trading with a very small account. I risked a little over $4,000 to make $700 in a few hours. And I actually, again, I underestimated this. Coulda, woulda, shoulda made anywhere from, $2,000, $3,000, or even $4,000 if I had timed it perfectly. So this was not best case scenario. That's also important for you guys to recognize that. The 4.4 million that I made, it's not best case scenario, okay? I've traveled to over 100 countries. If I just lived a boring life and I just sat, in my office in Miami Beach, in a good time zone where sometimes, I'm in Asia and it's not so easy to trade, but if I focused and just did not travel, I probably could have made 10 or 15 million by now. But I don't care. My life is not just about making money. I want to live my life, and I want to take advantage of the beautiful part of my trading where I can do it from anywhere in the world, even if it hurts me a little bit. That's fine. I don't need much more, okay? I know a few billionaires, they're screwed up in the head. I know some people who are worth 50 or 100 million. You don't need that. Trust me. I know you think you do, but you don't. A few $1 million, you can live very, very well, and that's all you need. Here's dip buying pattern number 2. This is a boring but reliable pattern. Dip buying and shorting supernovas. So for me, a supernova is when a small stock goes, parabolic, whatever you want to call it, where it can go up from like 1 to 4 in a few days, or 70 cents to $1.50 in a few days. And most people would say, wow, the value of this company just doubled. This is scary, or tripled or quadrupled. I want to stay away. I don't want to stay away. I like this volatility. I like trying to short it after it's gone up too much on the first red day when the momentum starts to shift. But shorting can be tough, especially when you have a small account. as many of you guys have learned. So lately, I've been focusing more on dip buys. With these supernovas, you get these huge run-ups and run-downs. But the cool thing is when you have a run-up and a run-down, you also have a bounce. So for me, I'm looking for these. If I can't find shares to short, which sometimes happens, I look for the dip buying opportunity. Sometimes I do find shares to short. Let me just show you a few examples from years past and from recently. This was BPSR. Each one of these represents one day. Okay, this is February 23rd, 24th, 25th, 26th, 29th. Look at this. Every single day it goes up a few cents a share because it's a manipulated penny stock. And what happens? In one day, it loses it all. This is what happens with these kinds of plays. When they're promoted by Wolf of Wall Street type characters or newsletters, they can lose it all very quickly. And sometimes they do. And if you can find shares to short anytime after like day 3, day 4 of the spike, guess what? You can profit nicely. Here's another one, NXTH. I actually made $12,000 on this while I was at Whole Foods. This was Shaquille O'Neal's pump, and the stock dropped from the 3s down to 175. It dropped 50% in like 20 minutes. This is why it's so dangerous to just invest in any penny stock, because these cracks can happen. But there actually was a decent little dip buying opportunity. You could have made 30% on your money on this dip buy. Instead, I shorted it and I made $12,000, covering while I was at Whole Foods. Whole Foods, the grocery store, sometimes has Wi-Fi. That was an amazing trade. Here's another short on DIMI. This was a blatant pump from 2 cents to 16 cents. And it dropped from 16 cents down to 4 cents all in a week. I was shorting it in here. HGSH, look at this run up from 50 cents to $3, and I was shorting it multiple times. Okay, and I made over $10,000. This kind of run up does not last for very long. And it happens again and again. These are a few years old. CADC, 40 cents to $1. I shorted at 87 cents. There were 700,000 shares available to short if you were prepared. And it went straight back down. But here's one recently. This was a few days ago, CNBX. This was one of these hot weed stocks, and I shorted it on the first red day. You wait for the first red day, okay? You wait for the momentum to dry up a little bit. And again, it's not guaranteed. Sometimes a stock will have a first red day, and then it'll keep going. If you're wrong, you cut losses quickly. But oftentimes, you get a first red day, and then the next day you get a morning panic. And that's what happened here. All I did was bet roughly $1,400. So this was a very small trade for me. And yet I still made $200. That's how you grow a small account. I made nearly 18%. If I had waited a few more minutes, it could have been 25%. But I don't care about a few extra dollars. When you have a small account, you have to grow it. You have to focus on taking 10, 15, 20, 25% profits so you can grow your account, so you can take bigger positions, and then it really matters. If you're betting $1,400, you're never going to make $1 million anytime soon. Your only hope is to grow your account, okay? This was a $1,400 or $1,350 bet for me, but I made $200. So theoretically, what if I only had a $2,000 account and I'm taking this trade and I grow my account by $200? My account just grew by 10% in one trade. That theoretically is impossible. CNBC will say, this is speculative, this is gambling, this is bad. Listen to our bald-headed man who's right 30 to 35% of the time. That's what CNBC would say. I would say I prefer my patterns where I'm right 60, 65, 70, 75% of the time. And I'm not bald, and I'm not on TV, and I'm taking these little profits on these little stocks that no one cares about, but somehow these patterns win more times than not. And trust me, I would have bet bigger if I could have on this one. The problem with these shorting these kinds of stocks, there's not that many shares to short. So lately, I've been doing more dip buying. Here is an extension of reliable but boring pattern number 2, dip buying these supernovas. So here was another play that was promoted, CATQ, and it dropped. This is all in one morning. It dropped from $2.40 down to $1.30. So it dropped nearly 50% in 30 minutes. The dip was an amazing time to buy. And I actually caught the bottom here at $1.30. Just a few thousand shares, but it actually spiked. You actually could have doubled your money here. This was amazing. It went all the way back up. But I take safe profits, and I made roughly 20% on this one. So this was a good trade. If you can't find shares to short, look to dip buy panic. And you can figure that out when there's support. There was a lot of support, a lot of big buyers here at $1.30. Obviously, you can see it, you had like an hour to actually buy the dip here before it really spiked, 50%. So this is what I'm talking about with adapting. There's always going to be potential trades, but sometimes the trade that you want isn't available. So you don't necessarily have to say, oh, let me just give up. I can't make the trade. I can't short the stock I wanted. It opens the door to another opportunity, because if you understand these patterns the way that my top students and I do, you understand that there's multiple ways to play it on the way up and on the way down. So you don't have to be so frustrated when there's no shares to short. It's actually easier to make money dip buying because any broker can do it, and you often get these faster trades. Here was another $1,200 trade that I made just the other day, okay? This was right when I'm traveling, and I'm still making $1,000 on a very small trade. And it was the exact same kind of morning panic, $2.60 down to $1.50. Nearly a 50% drop. Look at all these red ticks. This is 1 minute at a time. And I caught the exact bottom on this one again. And I sold it too soon again. $1.50 to $2.20. This is all in the course of an hour. You could have made 50% on your money. I took my 20, I think I made like 24%, 25%. So I'm going to take my 20, 25% because I'm not trying to be perfect, okay? I'm trying to grow my account. I'm trying to show you specifically, wait a minute, when is a good time to buy? Well, when you have this maximum pain. Look at it dropping a little bit, a little bit, a little bit. But then when it takes out $2 a share, you have a lot of stop losses, okay? If you're long these stocks, you're taught, and basic trading teaches you to use stop losses to protect yourself. Of course, it's total BS because with penny stocks, the stocks drop too fast, so your stop loss is irrelevant. And the beautiful thing, if you're a short seller, as these stop losses get taken out, it creates this massive wave, this actually tsunami of sellers who think that they're protecting themselves using these stop losses, when in fact, they're just adding to the wave of sellers. So when it takes out $2 a share here, the losses speed up from $2 to $1.50. And these are all stop losses from people who thought that they were protecting themselves. And then they lose money and they'd say, oh, what happened? I hate penny stocks. No, you just had bad information. You had no guidance or no proper guidance. And you used a hard stop, which I suggest nobody ever does. Just because you think that you're going to be able to cut losses at $2 a share with some stop order does not mean that you're actually going to get executed. But I'm glad that there are so many people who are misguided and don't plan properly, because that opened the opportunity up from 2 to 150. And the stock spiked 50%, rebounding to what the stock probably should have been if there were no stop losses. And I made some good money. Here is boring but reliable pattern number 3. This is what I call my gimme pattern. Low price stock breakouts have the most upside. Here was XXII a little while ago. You can see here for multiple months, from August to October, then December, it could not break out. And you could draw a perfect line here at $1.75. This attempt right here in early October, they won a giant contract with a giant multi-billion-dollar company, and the stock still could not break out. Remember pattern number 1. I say that I like stocks that spike and then hold their spikes to show that they have legs. Well, on this one, the stock needs to hold its breakout. So even though it touched 175 here, it did not finish high. That's why this is a red bar instead of a green bar. A red bar is when the stock opens high and finishes lower. So even though the stock is up on the day, it's not finishing strongly. This is not a buy signal. But look, in early December, it did break it. And there wasn't even anything meaningful, no big news, but the chart itself proved that the stock could support higher prices. And I bought it, I made roughly $10,000. I kept going in and out because I have no patience. But a month later, I made nearly $40,000. So I want you to be on the lookout for potential breakouts like this. Every time you see a stock getting to a multi-week or multi-month high, I want you saying, wait a minute, let me remember. And let me pay extra close attention when it's at this key level. And that's not to say that it's always going to break out. Sometimes it'll just fail, like it did here. But if and when it does break out, then some lights should be going off in your head if you're prepared. Here is EKSO. I was actually on a $12 million yacht filming the TV show Below Deck, which they didn't show this trade, of course, because it's sad. But I made $70,000 while on this yacht because, frankly, I bet big because I thought that I was going to be on TV and this was going to be a great trade, and they didn't even show it. But whatever, it's cool because it gave basically me a free yacht ride. This was a yacht charter for me and 6 of my top trading challenge students. I treated them. It cost me roughly 60 grand, and I made 70 grand on the yacht. I would never have gone that big if I wasn't on a TV show. Normally, I don't trade that big, especially lately. So it's kind of good karma. You know, when you teach, the universe finds ways to reward you. And I was rewarded, my students were rewarded with this free yacht trip. And even though they didn't show it on TV, my students recognized it. And this is a picture of my student, Blake, who actually was using stocks to trade software while we were eating lunch. And he spotted EKSO breaking out past this range. You can see there was a clear range here in the mid 3s. I bought it. I was late in the 5s. The next day I sold in the 6s. It actually hit the 8s. So there was a lot of slippage where I didn't catch the initial breakout. I didn't catch the actual top, but I still made $70,000 aboard a $12 million yacht with bad Wi-Fi. And this was an incredible trade. I'll remember it for forever, as will those 6 students. And I want to do more of that. Here's a recent example. This was just a few days ago. HiiQ, and I just drew this basic line just to see, you know, look, there's a clear high here in early November in the mid 6s. And then you have one green day right here where it breaks that line and finishes higher. You have a fake out right here. Sometimes you can break out, but if it does not finish higher, like it did here on like November 2nd, it's not a breakout. It actually has to finish higher. It has to confirm the breakout. And it did. And after 2 days, look at this. From the 6s to the 9s, you can make 50% on your money. This is an earnings winner too. So they announced good earnings and you get the multi-month breakout. This is a gimme. And I missed it because, frankly, I've been traveling and I'm very much out of it here in Asia. So sometimes I miss trades, but the patterns are there, the opportunities are there. And I saw that several students, specifically JC and Mark in the chat room, both nailed this breakout. I think one of them I saw was in like at 650 and out at like 750, so they made $1 a share. And the other guy was just holding still, and he was up 50%. So be aware of these opportunities. You can spot these kinds of breakouts. Stocks to Trade is a software that I use to actually find these kinds of breakouts. Go to stockstotrade.com. You can check it. Here is a play that I did nail, CARA, and this is a very clear spike right here. The former high is in the low 8s. And guess what? It went through it, and it went all the way to the nearly 10. So you're looking for these past highs, and you can draw a line, and ideally you want a catalyst. This was spiking on good earnings too. So even though the stock market was down as a whole, this one kept rising and rising because it has this key multi-day breakout, and it's got the earnings catalyst, so it's got the momentum. I know this sounds too simplistic, but trust me, simple works, okay? If you wait for them. I'm not saying just buy it randomly. I'm not saying just buy it here. I mean, you could buy it here in the 6s and get a better price, but that would not fit my pattern. So I wait for my patterns. No different than Ray Allen, you know, he's practicing all these shots. You can shoot a 3 from anywhere in the court. You can go try and shoot, you know, a full court shot, but your odds probably won't be very good, even if sometimes it does go in. I like high odds setups. So I wait for the initial spike. I wait for the multi-day or multi-week or multi-month breakout, and that's when I like to strike. That's when my odds are highest. Here's my trade on CARA. I made a little over 1,000. So kind of cool. So what do I do after finding a stock that fits one of these 3 patterns? Well, lately, what I've been doing that has helped me tremendously is I run stocks through a simple score. And this scoring system goes from 10 to 100. I call it the psych scoring scale or the psych sliding scale. And this is my new standard now on every single trade. I make sure that a trade has a higher score than 70. And 7 or even 8 times out of 10, the trade is profitable if it's over a 70. The higher, the better. And I cut losses quickly when I'm wrong. Just because a stock might have a score of a 75 or an 80 doesn't necessarily mean that it's going to be 100% of the time a profit. Sometimes the stock does not cooperate. And you have to understand that about the market. But more times than not, I win. And when I lose, the losses are smaller than my gains. So my account is always growing and compounding over time. And this brings me to an important lesson about compound interest. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it, said Albert Einstein. Compound interest is when your account gets bigger and then you get paid more interest because your account is bigger. You know, if a bank, let's say, is yielding 2% and you have $1,000, okay, you make $20 in interest over the year. But if you have $2,000 in the account and the bank still pays 2% interest, you're making $40. And you're not doing anything different, you just have a higher base. Compound interest theory applies directly to compound trading gains. With each successful trade, you have more to trade with on the next trade. Even if you're averaging the same percent gains, the balance will be bigger each time. Let me go back for a second. Where was this trade? CNBX, where literally 1,390 shares is what Interactive Brokers had to short. I would have liked more, but finding shares to short is tough. So I'm betting roughly, $1,300, call it. And I'm making $230 on this one. Well, if my account were bigger, and if Interactive Brokers in this case had more shares to short, I could bet 1,500 or 1,700 or 2,000, and then I would make 300 or 350 or 400 on the exact same trade. So for those of you with very small accounts, you have to focus on doing what you can to growing your account. Then you can take bigger positions. And I know you want that to happen right away, but trust me, it's good to start small and get in the habit of practice. Ray Allen took 46,000 shots or something, right, during his NBA career. But he also took hundreds of thousands more during practice. You have to practice in order to achieve. You cannot just expect success right away. All right, where was I? Oh, there's too many. All right, so compound interest, think about that, but also think, wait a minute, compounding your trading account. That is huge. So how do I do this? Well, the market has been on fire with more plays than ever. All of my top students and I are earning a solid 6 figures a year. Whether you're trading small like me, 134 grand, or trading big like Tim Grattani making nearly 700 grand this year, it's a good time. But we are also due for a bear market. So you must be more prepared than ever. And I actually prefer bear markets because I like short selling. New tools like stocks to trade help make education easier. You can now spot breakouts ahead of time. You can plug in all these different scans on stocks to trade. So you have no excuse to fail, especially if you're dedicated. Maybe a few years ago, oh, I don't have the proper guidance. Oh, I don't have any scanning tools. I missed this one because I was in class. Now you have all of these tools and you have the ability to have proper guidance. The only question is you. Are you going to work hard and study hard to get the success that I think you deserve? You can't cheat your way to success. You can't just study 1 hour per year and expect to know everything. 1 hour a day is pretty good. I'm not saying you have to do 10 to 12 hours every day and burn out. You have to think about education as a long-term phenomenon. It's a marathon, not a sprint. And for several students, it's taken 6 months, 9 months, 12 months, 15 months for everything to really click. But when it clicks, you take it trade after trade after trade, you're compounding your account over time. Being prepared ahead of time makes you a successful trader. Discipline makes you a successful trader. No gambling, no trading just for the thrill or the action. This is not Vegas. Following time-tested rules learned the hard way, on my own, remember, over 18 years has taught me this. Trading only when the odds are in my favor, waiting for those boring but reliable patterns, capitalizing on solid risk reward, patience to wait for the best plays, staying 100% cash when there's nothing great, but also being ready to trade if a solid setup comes about. Small profits add up over time. Remember that. I know you want big profits right away. I have to repeat this. Do not expect big profits right in the beginning. Expect big leaps in your knowledge account. You have two accounts, your monetary account and your knowledge account. You actually have to grow your knowledge account before you can grow your monetary account. And you take it one trade at a time. And the cool thing is that every trade, win or lose, helps grow your knowledge account, even if it doesn't necessarily grow your brokerage account. You might lose 20 bucks on a trade, but guess what? You get smarter, you get wiser. and that is fantastic. No one trade will make you rich. No one trade will make me rich. But if I bet too big and get too cocky, one trade could ruin me. So always be afraid of potential ruin. This is not an exact science, and most traders lose money. You need to recognize that. So trade scared and cut losses fast. Don't let small mistakes turn into potentially big disasters. When in doubt, get out. I have my boring but reliable patterns, but sometimes the stock doesn't do what I want. And guess what? That's okay. If you cut losses quickly, it's not the end of the world. By trading scared, that makes me not scared to trade. Think about that. If I go into a trade thinking, okay, if I'm right, that's cool. If I'm wrong, though, I'm going to get out quickly and lose a very small amount. That mentality helps me have more confidence. And also, I want to focus on trading volatile, low-price stocks, both on the way up and down, long and short. You don't just have to be bullish. You don't just have to be bearish. You're trying to take the meat of the move, up or down. If you're trading volatile stocks, there's plenty of ways to make money on the way up or down. You will never see me have 100%, 200% winners. I take profits quicker. At most, I'm going to make 30 to 50% on a trade, which is fine for me. And oftentimes, I make 10 to 20% when I'm trading extra safely, like I am right now in this post-election market. Before every potential trade, I review my indicators to make sure it's a worthwhile setup. I cannot encourage you to do this enough. Plan ahead of time. If you don't have a plan, don't risk your hard-earned money. I will never enter a trade based solely on my gut or any tip from anyone. My indicators, my psych sliding scale protects me from losses, and it increases my odds of success on every trade. Remember, nothing is perfect. I am not perfect. And sometimes I forget to check one or two of the variables in my psych sliding scale. I'm not perfect. So this guide serves as a reminder for me too. Review my trader checklist before every trade, and it can only help you. And it gets easier to understand and internalize all over time. Let me explain what my psych sliding scale is, because I mentioned it. It's based on the CAN-SLIM investment approach. CAN-SLIM is described in this great book called How to Make Money in Stocks by William J. O'Neill. The strategy does not work, okay, right now. It worked in years past, but too many people began using it and it stopped working. It happens. I kind of got into teaching with the hope that I could stop trading, because this has been a gift and the curse where sometimes I want to just live and I don't want to have to look at stocks. But if I see a pattern, I can't help it, because I know that the pattern is good and my odds are good, and I just stop living as much and I focus on trading. I miss my college graduation. I miss a lot of friends' birthday parties. So for me, this teaching, I tried to actually turn my strategy into CAN-SLIM, where if enough people got into it, the strategy would no longer work and I would be unburdened anymore. Unfortunately, or fortunately, depending on how you look at it, I've been very successful as a teacher, with many students having success, but the patterns have not changed one bit. So it's kind of crazy. So now here I am. I'm totally honest with you. I'm going to tell you the good and bad of my strategy. So here I am with more plays and more students than ever. And now it's just about accepting my fate, dealing with it, and trying to help you guys as much as possible. So CAN-SLIM is based on, quarterly earnings per share having big spikes, annual earnings increasing over the past few years. The N stands for new products or new management or new highs. S means a small supply of stock. L means he only wants to trade or invest in leader stocks, not laggard stocks. I stands for that he wants institutions invested in the company. And M is the market overall direction. So he puts all of these indicators together and spits out a score, a CAN-SLIM score. He has, specific numbers here. Like he wants 18% annual earnings growth, 20% annual earnings increase, 20% over the past few years. Again, the N is the same. S, he finds that 95% of winning stocks had less than 25 million shares outstanding. So that means all small cap stocks. So that basically means, CNBC and Bloomberg and all these media companies that don't highlight small cap stocks, they're focusing on the 5% of stocks that win. It's the dumbest thing ever. So William O'Neill is not necessarily a trader, but a lot of the stats and statistics and conclusions that he's drawn particularly apply to small cap stocks. So this boggles the mind as to why almost everybody in the world ignores these stocks, and yet they have 95% chance of winning in the long run. Even though, again, CanSlim does not work perfectly. I'm not advocating you to try CanSlim. I'm saying I use this as a background to develop my own scale. So let me just go into mine real quick. This is the Psych sliding scale. I use a little, I have no CanSlim. I have no fancy weird word. I just use the word prepare because I think that's central to my message. So I look at pattern and price. I look at the risk-reward ratio of every trade. I look at how easy or difficult it is to enter or exit the trade. I want to see past performance and what is the history of spiking big when I get into a trade. This one is hugely underappreciated. What time of day is it? And what is your personal schedule? This is going to be a different answer for everybody. If you're in Asia like I am, the hours for stock trading are very difficult. I didn't even wake up this morning for the market open because I knew that I was going to be giving this webinar, and I also wanted to trade the afternoon close. So I picked my spots very carefully. R, reason and catalyst. Like I said, I like big investors getting involved, billionaires, or an earnings win, or a new product launch. And then E, what is the market environment? And so each one of these different things on the scale I consider on a scale of 1 to 10 or 1 to 20. 1 to 20 is more important, obviously. So the pattern and the price is more important. The risk-reward ratio is more important. The ease of entry and exit, again, this is for me because I'm trading with a small account. It doesn't really matter if I miss a stock by like a penny or two. If you have a big account, maybe this is more important for you. Past performance and history of spiking. I want to see, again, what has this stock done in the past? Does it have a history of spiking for multiple days? What are the odds that it's going to spike again? CARA, which I brought up earlier, has a great history of spiking for multiple days, and it did it again this time. What time of day is, and what's your personal schedule is 1 to 20, because it's very important. I don't care if you have the best trade in the world. If you're flying all day and you have no Wi-Fi, your personal schedule should be rated a 1 because you can't make the trade. So that hurts your ability to make the trade since you can't make the trade, okay? A lot of people want to try to ignore real life and say, oh, Tim's just making excuses because he's traveling. Guess what? I'm living. We're all living. It's not an excuse to recognize what your schedule is. Some of us have family meetings. Some of us want to hang out with friends. Maybe you're in school. Maybe you're at work. You have to consider your own personal schedule. It is pathetic that some traders out there will say that your personal schedule doesn't matter. They are slaves to their job, okay? That's not what I want you to use the stock market for. I don't want you to trade one cubicle for another. I know there are some people who don't leave the stock market. They have multiple monitors, 8 a.m. to 8 p.m. every single day. That's not a life. That's not freedom, unless you choose that. But sadly, most people don't choose that. They just become addicts. They want the action, and it's reassuring to them. They can't wait to just gamble. That is bad. Anyways, I also look at the reason and catalyst, and I look at the market environment. Right now, I'm trading extra cautiously just because of this post-election market. I just don't trust it. So be very, very careful. Remember, I am far from perfect. This is not an exact science. But taking high odds trades over and 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 over adds up to wealth over time, even when sometimes you're wrong. At worst, these indicators will slow you down from over trading and get you thinking more on every single trade before you risk your hard-earned money. At best, it'll make you more profitable. So if the total SSS score is mid-range, let's say between 30 and 70, it's really not worth trading for me, and I'll likely avoid it. But if I can get it to 75 or 80 or 85 based on those indicators, I will take the trade. And I'm only introducing this after 9 years of teaching because I think it's going to help you guys greatly. Remember, I'm not a math whiz, though, so feel free to improve upon it. The goal is to be better prepared on every trade that leads to higher odds of success. Here is what this prepare method kind of looks like, where you can plug it in, you can create a spreadsheet, or you can go to actually profit.ly/SSS. We posted a free one there. And it's just an Excel spreadsheet where you add up these different indicators, 1 to 10 or 1 to 20, and you get the total value of the potential trade. You can read books and watch DVDs about flying a plane, but chances are you will crash before you figure out everything on your own. This is the difference between theory and practice. So while I encourage you to study, I also encourage you to practice. Anybody can tell you what you should have done yesterday in the market, but you need to learn to practice how to anticipate and react so that you can eventually master my strategy on your own. Studying is just one component, then it's practice. You know, Ray Allen did not sit in some class and read all these books about basketball. He was out on the basketball court practicing his shot. And for you guys who want to be traders, you have to practice your trades. Even if you bet small, even if you paper trade and you're not risking any hard-earned money, you have to get used to, wait a minute, what is the process of actually buying a stock here, selling a stock ideally higher, or shorting a stock high and covering lower, and making a profit, making 10, 20, 30%. It's kind of a weird thing. Remember, most people think that I'm absolutely insane for trading penny stocks or short selling or day trading. I'm partaking in all this crazy stuff that no one wants to get involved with. And yet, it's because they don't understand it. There's nothing wrong with penny stocks in themselves. There's nothing wrong with day trading in itself. There's nothing wrong with short selling in itself, as long as you go about it the right way. Too many people just invest in penny stocks because they think that they're investing in the next Microsoft. That's the wrong way, okay? You need to learn to practice. And instead of chasing today's biggest gaining stock, you need to learn tomorrow's biggest gaining stock and be prepared with a plan. You need to learn to give yourself an edge, studying the past, making predictable watch lists, following boring old trading plans and rules, and perfecting this for yourself and your personality and your schedule. So how do I create successful traders? Well, I teach my students everything I know. I trade live with my students every single week. I tell my students what stocks I'm watching and my trading plans daily, ahead of time. The vast majority of my trades are predicted in watch lists the night before or in commentary the morning of. My students come to me and my team of millionaire traders directly with their questions. That's what we are here to do, to help you. Practice makes perfect. Remember, everybody wants fast success, but that's not lasting. Even Tim Grittani, who was at $3.38 million in profits in 4 years, took 9 months before he was even consistently profitable. Not 9 months before he made $1 million, 9 months before he was consistently profitable. It still took him 3 years to make $1 million. The good news is you get better, faster, smarter, more confident over time. You cannot get worse by studying and preparing. The more you prepare and practice, the better your odds of success on every trade in the future. And I want more millionaire students, not people who give up and don't have the right educational mindset. If you're in this with me. So here is my year-long game plan for you. If you want to become a self-sufficient trader, which you should, if you want to become my next millionaire student, which you should, I have mapped out your best path for success based on what I've seen work best for my students. And a handful of you are going to get to experience this new path with me right now. So this new process begins now. An entire day of live trading, preparing you for the upcoming year. Then 2 days live with me in December, in person, in my Los Angeles office, where I will show you everything. That will help you on your way, but it's just the start. We repeat this process several times throughout the year. Rinse and repeat over and over and over again, making you more comfortable with this. If you can't make Los Angeles in December, that's fine. The whole event is archived. And I will be doing it again in February in Miami. And again, East and West Coast, wherever I go, because I'm traveling all over the time, giving you plenty of potential to join me live. Several times over the next year, you will be spending days with me, live, trading the markets, going over every single step. I'll also be live streaming my entire trading day several times over the year, so you can tune in from anywhere in the world. That will help you on your way, but it's just the start. We repeat this process several times throughout the year, over and over and over again. There is no quick fix. Practicing boring old habits. I have found the best chance for true success is through repetition. Rinse and repeat over and again. Practice, practice, practice. Trading live with me over and over again throughout the year. just like Tim Grittani has done, and Michael Good and Mark Crook and Tim Bowen, who's a part-time trader, and he's made $50,000 a year on average. All of my top students, no matter what their goals are, have traded live with me. All my biggest success stories have been due to trading live with me in person and seeing everything, seeing my screen, seeing exactly how my mind works when I see an opportunity, why sometimes I don't necessarily jump in right away into a trade. I'm saying, wait a minute, it's got to be a confirmed breakout. You got to experience it live so you can understand better. This will only be offered to those of you who are watching this right now because it requires commitment, not laziness, like the many people who are out there. They didn't take the time to get here and learn on this webinar. Let me warn you, this year-long game plan will not be easy. There is lots of time required, lots of effort required, but the journey is worthwhile, especially because I'm the only teacher with several millionaire students. So only I have the blueprint for seven-figure success. I know that's a bold claim, but it's true. All of my top students and I show all of our trades publicly. Nobody else does that. That matters. Transparency matters because we are real. And we're not perfect, but we are real. So let me repeat. This will not be available tomorrow because I am working with you personally. And frankly, my office cannot fit everyone here. So I only want the most dedicated, the most motivated, and the most serious students on this journey. Here's what's next. You call my team right now and see if you qualify. The number is 801-679-9036. Talk to my team right now. If you can't call in for any reason, then email admin@timothysykes.com. But trust me, if you want to be first in line, and there are some goodies with being first in line, call my team right now, 801-679-9036. This will not be available later on. I'm telling you this right now because I want action takers. I only want the most serious students. I am overwhelmed, frankly, by people all over the world who claim to want to be rich, but they're not willing to put in the time required to actually achieve it. So if you're serious, only if you're serious, and don't feel bad if you're not serious, if you're like, oh, this is interesting, but frankly, I'm just not that dedicated, that's fine. You're saving myself and yourself a lot of anguish by disqualifying yourself right now. But if you are serious, and if you truly want to be my next millionaire student, this is your opportunity to talk to my team and see if you qualify. The number again is 801-679-9036. Talk to my team right now. And again, if you can't call in right now for whatever reason, email right now, admin@timothysykes.com. I love teaching, and I want more successful students. So let me know if that's you. Thank you, and good night.